Hello, everybody, and welcome to a new PennyWise podcast. I'm Teri Barr, your host, and with you from Lee Enterprises. And oh boy, do we have an interesting topic today. This is going to be terrific. Taylor Tepper is here. Taylor is a personal financial expert with Forbes Advisor, and we are talking about the topic of the day, I think. Taylor, it's this cryptocurrency. Woo!
Yeah, it's fun times. It's fun times out there.
Okay, I'm sure you are getting a lot of questions. Just in general, for anybody that is listening or watching, what is cryptocurrency?
Yes. So it gets, I mean, a warning to your listeners, to anyone paying attention, it gets very hand wavy very quickly. So I will do my best to sort of limit the hand waviness. But basically, cryptocurrency, the idea behind it is that it's a decentralized form of money, right? So right now, the Federal Reserve is in charge of our money. It raises interest rates, it lowers interest rates, it determines, all of this really important stuff. Bitcoin or cryptocurrency doesn't do that. It is controlled by people who sort of spend money, people who take in that money, and then it's all sort of logged on this thing called the blockchain, and it's very, very complicated and involves a lot of math. So that's sort of what cryptocurrency is supposed to be. That was sort of why it was created. It was supposed to be this way to spend money where you didn't need the government in charge. It was all sort of anonymous. And also you didn't need, the idea would also be that it would reduce transaction costs. So like you wouldn't have to pay, companies wouldn't have to pay money to credit card companies when you sort of buy something with a Bitcoin or some sort of form of cryptocurrency.
Okay.
That is sort of the promise of it. But that's not really what it is now, right? So like right now, no one gets paid in cryptocurrency, and very few people buy things in cryptocurrency. And so the reason behind that is because A, we still just use dollars, and B, the price of various cryptocurrencies, especially Bitcoin, goes up and goes down, and it's a roller coaster, and it's all over the place. And functionally, it would be rather devastating if our paycheck was in this form of currency.
Oh boy.
So yeah,
up and down. Woo.
Up and down. Yeah, you get paid the equivalent of like $2,000 this week and $50 next week and $45,000 the week after, and negative, you owe money. So it's just like, it's very, very difficult. So the sort of the way that it is sort of developed over time is that it's gone from the promise of replacing dollars, of replacing how we spend money, and now it's sort of this shiny light speculative investment. And so people are interested in it and want to buy it because it goes up in value, and they think that they can sell it to the greater fool to make some money.
And it's interesting, we've heard about Bitcoin for a while, but it seems recently to have really exploded in the news. It's kind of this explosion of Bitcoin. Why the great interest in this, especially now, Taylor?
So a couple of developments have happened. Basically, it's just over the past year or so, and especially recently, like you mentioned, more and more big time money people are getting involved. More and more banks, investment companies are sort of legitimizing what Bitcoin is. So Tesla, for instance, announced recently that they bought a lot of Bitcoin. BNY Mellon, Fidelity, MasterCard, all these, PayPal, all these places, all these companies are in one form or fashion making it easier for people to hold, buy, invest in Bitcoin. And so that level of interest among investors is helping drive up the price. The more buyers there are, the higher the price will be. And that is sort of because that has caused the price to rise so dramatically, more and more normal people are looking at this thing and going like, why don't I have Bitcoin? It keeps going up. It's this amazing trade that just seems to defy gravity and only get more and more expensive. What am I missing here? Why haven't I got involved? Why am I so stupid? And so it has this sort of feedback loop.
Wow. Okay. So we're getting a little feel of the who's sort of getting involved in Bitcoin, but I guess I'm still wondering why. What do you do with it?
This is where it gets pretty hand wavy. So
Okay.
you don't do
Okay.
it. You don't do anything with it. The whole point is that it's this digital thing, and it's supposed to exist on your computer, and you buy things with your computer, and it's all settled. That sort of buying and selling is settled on your computer, and all of it exists like on the computer, out in the digital world, not in the physical world, right? So you don't do anything with it. It has no inherent value. It has no purpose other than to be this medium of exchange. And so, yeah, so it's like, well, why is that worth it? Like, I think it's for your listeners and your anyone paying attention, just take a step back a little bit to have an open mind, because a lot of things that have value don't make a lot of sense if you sort of look at it from a certain angle, right? So like, or we don't have tangible access to it.
Yeah.
So
Yeah.
so your paycheck, for instance, right?
Hmm.
I get paid 2 times a month. I don't touch that paycheck. That paycheck is entered into dollars and cents on my computer. When I go to buy things, you know, I do use my credit card, but in the physical world, but I very rarely buy things with cash.
Hmm.
And when I buy things online, I'm literally just entering in numbers, and numbers are coming in and coming out. So it's all sort of
Yeah.
it all exists in a digital way right now, and people are sort of comfortable with that. So
That is
that's one
so,
sort of exit.
yeah, that
Yeah,
is so interesting. The idea
yeah,
of like touching your money anymore just has gone away.
right. But
Yeah.
because we were sort of used to money being this thing, you can hold dollar bills in your hand, you can write a check, because we sort of had this sort of tangible, um, residual tangible artifacts
Yeah.
that are becoming less and less popular, but we still like use. We can sort of make sense of it. Whereas Bitcoin is just inherently digital, and so that's sort of weird for people, and that makes sense. It also has like a stupid name. Like Bitcoin is just it sounds techy, and something that like is other, and it
Mhm.
doesn't sound something that's sort of a part of our lives. But also, like, so another point I would want to make real quick is like, think about, is a sort of from the field, no pun intended, but like, so sports cards right now are a huge market in sports cards. Sports
Mm.
cards are becoming more and more valuable, a lot of them. And so, but think about that. We want to buy sports cards. Why? Because we like sort of, it's a piece of paper. It doesn't have any utility. If I wanted to like start a fire, I guess I could take the card and put it in the fire. But it has value because people think it has value, because they like it. They think more and more people want it. It has this inherent value because people enjoy owning it. And so if you think about it like that, there are things in our lives that we value that
Mhm.
don't really correspond to utility. It's something a little bit more ephemeral, or a little bit less tangible.
Yeah.
And lastly, just money itself, the dollars that the government prints out aren't backed by anything, right? It's the full faith and credit of the United States. And so it has value. A dollar is worth a dollar because we all agree on that it's worth a dollar. It's sort of this
Right.
weird tautology. And so that's why it gets pretty hand wavy pretty quick. Bitcoin doesn't have any value. It doesn't really have any use other than the fact that people say it does. And
Hmm.
if that's sort of weird for people to think about, you
Mhm.
know, realize that, or use this sort of framework of Bitcoin is gold, you know, gold. We don't use gold for really anything anymore.
Mhm.
Yes, you put it on your teeth, and yes, I think it's used in
Yeah.
remote controls or something like that. But it's very, very rare that we actually use gold. But because gold has been around for a long time, and there's sort of a finite amount of it, and we've all sort of agreed that gold, this shiny yellow metal, is worth something, it's worth something. And so Bitcoin sort of operates along that path.
Okay. So Bitcoin, I'm going to guess, and going along with what you're saying, you don't necessarily want to invest in Bitcoin and say, I'm going to put my college, I'm going to pay for my kids' college because I've got Bitcoin and that'll get them through college. I'm going to buy a house with, what I made on Bitcoin. That's kind of not a real thing then.
Right. So
Okay.
I was thinking in this for this interview, I was thinking about this, and a lot of my job is to take something that's sort of interesting that people like are intrigued by, and
Yeah.
tell them that they should not partake in it. I'm like,
Oh,
it's
no.
a very not, it's not a fun position to be in. I'm sort of a hall monitor for financial prudence. Yeah, no. So Bitcoin isn't something that should comprise a large portion of your portfolio.
Ah,
Like when you are planning for your retirement, when you're planning for your kids' college, when you're planning for anything over the long term, you need to look at assets that have a history of delivering returns. And so that's if a diversified stock and bond portfolio that you can sort of count on. You know, when you're buying an S&P 500 fund that you're sort of you're going to reap the benefits of future cash flows of all those companies. When those companies make profits, it's gonna be down to your benefit. You know, when if you're buying debt, like you're gonna get that sort of coupon. Like there are that stuff has been going on for a long time. With Bitcoin, it's very, very new. There's no predictability when it comes to the price. It goes all over the place.
yeah.
And it's not something that you can rely on over the next 40 years to fund your retirement. You can't really run a model on like what Bitcoin is going to do for you. We don't even know if Bitcoin is going to be the dominant cryptocurrency or if there is going to be cryptocurrency. It's just very, very hard to know. Like maybe the Fed gets involved with digital currencies. Who knows what that means and what that would do for demand for Bitcoin. So it's just very, very hard. It's a speculative asset. It's something you buy because you think you can sell it to someone else pretty quickly to make a buck.
Ah,
That being said, if there's a case for if you're saving enough for retirement, if you're saving 10 to 15% of your paycheck,
mhm.
including any match in your company's 401k or any sort of retirement savings account, if you have an emergency fund with a good chunk of cash in it
Ooh,
that could cover 3 months worth of expenses at least,
yeah.
if you're doing all the things you should be doing,
Mhm.
you can dabble a little bit in it. You know, you can put a percent or two of your portfolio in it. You can, depending on how big your portfolio is, I guess, and your risk tolerance. But like
Right.
if you are sort of meeting your needs elsewhere and you have this disposable income, by all means you can do that. It's just the same way as like I wouldn't tell people to they have this disposable money to not go to a restaurant and only eat, you know, canned tuna or you know, don't go to Vegas for like a fun weekend or
Right.
you know, I don't want to be that too much of a scold. Like if you can do it, if you have sort of crossed your eyes and or crossed your T's and dotted your I's is sort of
Right.
how I would frame it.
Isn't it funny? Everything gets back to the basics of having all of the things covered you need to have covered. And then say you've got a small amount or, whatever amount you just kind of want to, I think you said dabble in it and see what happens. But really, again, have those majority things covered that you were talking about.
Yeah, and I think like another way to frame that is so it's less, you know, tisk tisk is think about it as a reward. If I am saving my money in the ways that I should be saving, if I'm saving for college, if I'm paying down my debt, if I'm doing all the things I should be doing, I get to have fun with a certain amount of money. And so you can reward yourself for this sort of good behavior by dabbling in Bitcoin or betting on a basketball game or drinking an extra expensive bottle of wine, you know, whatever it is that sort of gets you through the day.
Right. Wow. I think I've learned a lot. I know everybody listening, watching will also, and we'll see if we get some additional questions following this, Taylor,
Oh,
that
I
we'll have
love
to
it.
follow up with you on. Any last thoughts for people still thinking, should I do this or not? Any last words of wisdom from you?
Yeah. If you, what maybe another way to frame this is invest what you're comfortable losing.
Ah,
So, you know, if you don't mind losing X amount of dollars, $100, $200, depending on $1,000, depending on who you are, invest it. If that's money that you won't miss, that's okay. But if it's money you're going to miss, I would think twice about it and, you know, consult a financial planner you trust.
that is awesome. Everybody, Taylor Tepper, again, a personal finance expert with Forbes Advisor, and all the initial things we need to know about cryptocurrency. And of course, we're talking a lot about Bitcoin here. Taylor, thank you so much. That was actually a really fascinating conversation.
Oh, I appreciate it. Hopefully people didn't fall asleep with their earphones in.
No, you kept it very interesting. And like I said, I'll be really curious to see what kind of reactions questions we get. And we're going to ask for some questions too, because we've got the people to be able to turn to like you to ask those questions. So Taylor,
Oh,
thanks
wonderful.
again.
Oh, thank you. This has been great.
Yeah, I'm Teri Barr, and thank you for listening to and watching our PennyWise podcast. And we'll see you again next week.